What is the stock market? A stock market is where all the participants who wish to transact in shares go. Transact means to buy or sell shares in the context of stock markets. The primary purpose of the stock market is to help you facilitate your transactions. So if you want to buy shares of a company, the stock market helps you meet the seller and vice versa. Unlike a supermarket, the stock market does not exist in a brick-and-mortar form. It exists in electronic form. You access the market electronically from your computer and conduct transactions buy or sell. It is also important to note that you can access the stock market via a registered intermediary called the stockbroker. India has two stock exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. There were many other exchanges earlier, but none of them survived. The stock market attracts individuals and corporations from diverse baccalaureate. Anyone who transacts in the stock market is called a market participant. The market participant can be classified into various categories. Domestic retail participants. These are people like you and me transacting in markets. Neris and Asai. These are people of Indian origin, but based outside India. Domestic institutions. These are corporate entities in India. Domestic asset management companies, AMS. Mutual fund companies like SBI Mutual Fund, HFANs, Edelweiss, SSE Pru, etc. Foreign institutional investors, non-Indian corporate entities. These could be foreign asset management companies, hedge funds, and other investors. Now, irrespective of who participates in the market, the agenda for all is to make profitable transactions, more bluntly put, to make money. When money is involved, human emotions, such as greed and fear, run high. One can easily fall prey to these emotions and get involved in unfair practices. India has its fair share of such unethical practices. Given this, the stock markets need someone who can set the game rules, commonly referred to as regulation and compliance, and ensure that people adhere to these regulations and compliance, thereby making the markets a level playing field for everyone. The regulator in India, the stock market regulator, is called the Securities and Exchange Board of India, often referred to as SEBI. SEBI aims to promote the development of stock exchanges, protect the interest of retail investors, and regulate market participants and financial intermediaries' activities. In general, SEBI ensures the stock exchange conducts its business fairly, stockbrokers conduct their business fairly, participants don't get involved in unfair practices, corporates don't use the markets to benefit themselves unduly, small investors' interests are protected, large investors with mega cash piles should not manipulate the markets. Overall development of markets, it becomes imperative for SEBI to regulate all the entities which are involved in the market. SEBI has prescribed a set of rules and regulations for each entity. The entity should operate within the legal framework as prescribed by SEBI. The specific rules applicable to a specific entity are made available by SEBI on its website. They are published under the legal framework section of their site. Credit rating agency, CRAIS, CRISIL, ICRA, CARE. They rate the creditworthiness of corporate and governments. If a corporate or gov entity wants to avail loan debt financing, CRES check for creditworthiness and assign a rating, the basis on which other entities can decide to extend a loan or not. Debenture trustees. Almost all banks in India act as a trustee to corporate debenture. When companies want to raise a loan, they can issue debentures against which they promise to pay interest. The public can subscribe to these debentures. A debenture trustee ensures that the debenture obligation is honored. Depositories NSL and SESL safekeeping, reporting, and settlement of clients' securities. They act like a digital vault for your shares. The depositories hold your shares and facilitate the exchange of your securities. When you buy shares, these shares sit in your depository account, usually referred to as the demat account. Depository participant IP. Most of the banks and few stockbrokers act as an agent to the depositories. You cannot directly interact with INSL or CISO. You must liaise with ED, to open and maintain your demat account. Foreign institutional investors. Fee. Foreign corporate funds and individuals make investments in India. These are foreign entities with interest in investing in India. They usually transact large amounts of money, and hence their activity in the market has an impact in terms of market sentiment. Merchant bankers. Parvi, Axis Bank, Edelweiss Capital help companies raise money in the primary markets. If a company plans to raise money by floating in IPO, then merchant bankers are the ones who help companies with the IPO process. ATFCAMC, Reliance Capital, SBI's Capital offer mutual fund schemes. NAMS collects money from the public, puts that money in a single account, and then invests that money in markets intending to make the investments grow and generate wealth. Portfolio managers. Portfolio management system. PNs. Capitalman Wealth PNs. Motolo P. As Parrot TMs offer PMs schemes. They work similarly to a mutual fund except in a POS, you have to invest a minimum of Rs50,000. However, there is no such cap in a mutual fund. Stockbrokers up stocks, grow, then act as an intermediary between an investor and the stock exchange. Stockbrokers act as a gateway to the stock markets, giving electronic access to stock markets to facilitate transactions.